It's finally that time for another portfolio update. And I know that I owe you for a few months in this one. I've got you covered, and I promise the wait was worth it. This machine closed out May at a new all-time high of $1,961,000. We are officially within striking distance of the $2 million milestone, something that still feels unreal when I think about where my journey began. But that's the whole point of this series. Anyone can do this. I am just a guy sharing what I've learned and what I do, hoping that it will help you get to where you want to be. In this video, we'll walk through the key metrics of this simple portfolio that has quietly snowballed over the years. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. If you get value from these videos, margin call the like button, subscribe if you haven't already, and consider joining the channel membership. It helps keep this section short and sweet. You know what time it is. Let's grow. The Moody Market. The market has been a little extra moody lately. My portfolio has dropped and risen 6 figures since I last reported in. And that's not exaggerated. We'll dive into all that data later in the next section. The truth is that the market has always been, and always will be, full of wild swings driven by investor sentiment. That's not new, it's part of this simple game. There are 2 keys to staying on the winning side long term. Build a well-balanced portfolio that will succeed in a variety of market conditions, and then stick to the system. If you dollar cost average into your positions to get that automatic comparative dip buying, like I do, just do that in all markets. The good, the bad, the ugly, it doesn't matter. And never panic sell. It really is that simple to outperform most investors over the decades. And if you don't want to customly build your own portfolio holdings, here's the simple cheat code. Dollar cost average into a low cost S&P 500 fund for your core portfolio, and then have a comfortable cash position on the side. I prefer VOO and SGOV respectively. Do that on autopilot for 30 or more years, ignore the noise, and spend your time doing the things you enjoy. All right, it's time to jump into my portfolio, which has in fact outperformed the S&P 500 benchmark by over $300,000 since I started investing 15 years ago. Yes, I tracked that. Yes, I'm nerdy. Let's grow. Portfolio overview. Let's dive right into this thing. And real quick, you can download a copy of this spreadsheet to track along with my journey or to save a copy and make it your own. We're gonna start out here on ETRADE, where we always do. It's probably still my favorite online broker because of the clean interface, even though it's lacking in some features. But you can see that I have all brokerage and bank accounts selected, so this is everything. And yes, my nephew's position is still out here. I stopped bugging him. He's busy. He's about to graduate high school, so I'll give him some time, but this will not be aggregated to Seeking Alpha in the next step. So I do have 4 positions out in ETRADE, and SCHD and VGT are in my retirement accounts. I'm slowly converting those still from traditional dollars to Roth IRAs. Most of them are in my 3 previous 401ks that I rolled over into a traditional IRA. And then GPIQ and QQQI, and I have roughly a 50-50 split. In fact, I have the same amount of shares as you can see here, are in my taxable account. And that's all that's in the taxable out here. And then this SWPPX S&P 500 index fund is my nephew's. It's not mine. For a custodial Roth IRA. He did turn 18 in November, so I'm trying to get him out on his own. Starting at the top here, with SCHD, our largest position out here in ETRADE, we have 15,464 shares at an average price paid of an inflated $26.50. And my true is probably $20.21, but I've moved this back and forth multiple times. I've said that in other videos. This isn't my actual cost. Mine is much lower. And the value at over $500,000. And then we have VGT, which split recently 8-to-1. So instead of 300 shares, we now have 2,400, but it is the same shares that I had before. And that's at $28.55 a share for a nice and juicy 324% gain, which is wild. The position's worth 290,000 and we've seen 222,000 of gains. That's crazy to see. And then GPIQ and QQQI, I have 3,180 shares of each. I've been dripping about 5 shares to each of them when either one of them pays a dividend. This means I'm investing about 10 shares each for a total of 20 shares between the two each month. When GPIQ pays, which is early in the month, and I kind of like the staggered payment too, I buy 5 shares of both of them. And then later in the month when QQQI pays, I buy 5 more shares of both of them for a total of 20. And you can go back and look at my most recent video if you want to see why I have both of these. I was very clear in my latest video release as you watch this. So I won't rehash all that, but together they're well over 300K and we'll get into that later. And I don't keep cash out here in ETRADE anymore. 28 bucks, that's just odds and ends because they don't allow fractional shares. I do keep the cash, which is an SGOV, out in Chase now, just so it's nice and accessible to my checking, which is in Chase. So the wife and I can move money around real fast that day. We love that setup. So I did move the cash from ETRADE over to the new location. And now let's go out to by far and away my favorite site on the internet. Now that was a terrible transition and I'm too lazy to re-record it, but that was for Seeking Alpha. I forgot we're going to first hop out to a very cool, but not my favorite site of M1 Finance. In all seriousness though, I do love M1 Finance. It's a great place, the best place for setting target allocations, setting up a distribution each week or each month, and letting it ride and do its thing. This site is phenomenal. But it is where I keep the HODL Factory, my individual stocks, and my YouTube money. So this is what I've turned my net YouTube earnings into over the 3 years. After paying the YouTube bills. It's all separate from my personal. So it's fun. It's like a little mini game for me. But where I want to go here is down to the view benchmarks. We're actually going to click into the HODL Factory. You can see it's up 104% total. But when you click into the HODL Factory and then you say time weighted return view benchmarks here, this is really cool. So you can see by default, we're on all. Since inception of April of 23, the HODL Factory is up 104%, to the S&P 500's 91, and then VT, the world market's 80. And I still have Berkshire too, just because Buffett's my hero. I know he doesn't run it anymore. They're up, ooh, that's really bad actually, 48%. So you can see I'm just out doing the market of VU, which makes me happy. And I also like to look at year to date. What have you done for me lately? And yes, we are still holding on to a slight lead, 13% to the market's 11% this year. And VT is actually outperforming VU again at 12%. So very close there. And wow, Berk B is down 6%. That's wild. Might be a good time to buy that one. But I just want to show this. My individual stocks that Hutch and I run, that little portfolio, the HODL Factory, is beating the market overall and this year. And I think I'm only going to release an annual video about that. So at the end of 26, I'll give a very detailed snowball analytics look in at the HODL Factory. I don't think the majority of you out there care, and that's fine. But now let's move on to that favorite site I was talking about. All right, we're out here. All portfolios is in full effect, and you can see that probably in the title of this video amount of 1,961,000. This brings all of my wife and my investments into one aggregated area. I do all my aggregation, I do my screening process, HODL Factory stats, just everything out of Seeking Alpha. It genuinely, well before YouTube, is the best site out there for tracking this stuff and just doing all the things, researching stocks and ETFs and the whole 9 yards. And you can try it for free if you want, absolutely free, link in the description below. But like I'm going to mention at the end of this video, don't use my link yet because the big summer sale is coming and you can save an additional 25%. So wait a week and you'll be much happier if you like what you see from the free trial. Now I separate out VU from the ETFs because I like to at a glance see if I'm beating it that day. Just in general, you can see the HODL had a rough Friday. I'm recording this video on Sunday here, but my ETFs did beat the market. And now that I've dropped down the ETFs, and I won't rehash these because you can see that it's SCHD, VGT, GPIQ, and QQQI. all the same out there from ETRADE, and you can see the shares are the same. You're just gonna have to trust me, bro, on this one. Let's move along. But VUG is different. It is my wife's HSA, health savings account, and this is the best option we find for investing within the health equity one. It's a little more limited. It doesn't have some of my favorite ETFs, but VUG is great. And she has, and this one's split as well. So the shares are increased, I think maybe a 6-to-1 split. I don't know that, but I think I remember around 100. I could be off on that. But we have 596 shares and it's worth $53,400. And now I've dropped down VU. This is our largest holding and it comes from my wife's 401k. And you can see here that we have, oh nice, just over 900 shares worth a total of $626,000, making it our largest position. And frankly, there's no single position in the world I would rather have as my largest position. And then the HODL Factory, I won't go into it here. There's 20 individual stocks. This is the one that Hutch and I aim to beat the market with over the long haul. A lot of quality factors in there. And it's at that $40,840. And now cash, mostly in SGOV. It's from a variety of sources, but really the majority is in SGOV, and then it has some checking and business checking and all that. Comes out to a pretty low $76,000. We've had a lot of moving parts lately, and we're working on replenishing our cash. But now let's hop out to the nerdy spreadsheet. Once again, you can download this spreadsheet for free to track my stuff or your stuff, however you want to use it. Save a copy, make it your own. It's in the description below. All the spreadsheets I share on my channel are free, and I have most of them in Excel and Google Sheets. I try my best to hook you guys up. And you can see that total number here. It's off by maybe a couple bucks. I round the pennies on these, but we're at $1,961,000. We're 39,000 away from that cool 2 million. But I just plug them in here. And again, I could have shares and have this auto update, but I like to punch them in once a week. I'm weird and old school. It's just fun to see. And this pivot table here on this tab shows my current allocations. This is by position on the left, and this is by type on the right, what I view as the types. We'll get into some of that. So VU is my cornerstone. It's just the overall market. And you can see the position here, $626,000. And then for value, it's simply SCHD as the second largest holding. Cash flow, we group together, of course, QQQI and GPIQ here. So we have $371,000 of cash flow. That's our taxable account. It's all the money in the taxable account in E-Trade. And then for growth, we have a combination of VGT and VUG. That rolls into growth, and that's that HSA that doesn't offer VGT. Or QQQM for that matter. And then that cash is 76, and HODL Factory is coming in at 2.1% at almost $41,000. And now the snapshots tab, this one's going to be fun in this video because my last video, you would think I did this on purpose to hide. The last video, I believe, was 1.756 million. And then I fell by $106,000. There's that 6-figure drop I was talking about since I reported into you guys. And I promise that's not why I took a break. I know this looks bad. And then just as bad is this $311,000 increase from 4.3, I guess really from 327 through 529, my most recent update. That is absurd, over $300,000. And again, that's not why I'm back now. I'm not a front runner. I was just genuinely on a break, so take it easy on me. But yeah, you can see that I highlight in green all the all-time highs. So we've hit 7 all-time highs in a row. It's been wild. But before that, things got pretty bleak. We got down quite a bit. Sometimes I like to just zoom it out and look, and we were well below 1 million not that long ago. And I didn't become a genius all of a sudden. I woke up all the days still an average Joe, but you know what? I set this stuff up, I stay true to the system, and eventually you get results. And guess what? We're gonna drop way down again. I can almost guarantee you we will lose a lot of money at some point, but we'll keep dollar cost averaging in to those target allocations. We won't panic sell. We'll stay the course. You can do this. You, not me, you can do this. And that's why I'm here. But this value pivot's cool because you just see the ending balance by month. And again, May is absurdly high. We averaged over 1.9 on our check-in. So it takes all those weekly things and rolls them into a monthly average. And you can see it's by far and away our highest. So the market is red hot right now, hence this red bar, but we won't get too high. We won't get too low. We'll stay the course. All right, now the fun stuff, okay? If you're a nerd like me, it's fun. Okay, just pretend. Just pretend like I'm cool for a minute. This tab takes our current investment value. It assumes an 8% pre-inflation. So historically, this is 10% return. This is not my inflation module. I do that after the fact and separately. So it's conservative by 2% compared to the historical averages. And it shows that in 1 year from now, we will be over 2 million. And in 5 years from now, we should be over 3 million. And that's if we get an 8% annual growth. And that assumes what we're currently putting in monthly and our starting value, which is our current value. And on our retirement calculator for the wife, our goal is 3 million. We have been tracking for 4.4 years. And our actual lifetime CAGR, no assumptions, is 18.89%. If this continues, which it probably will not, it'll come down to earth, but if it did, in theory, 2.5 more years like the previous 4.4, and we would hit that $3 million. And that puts us on November 12th, 2028. This run up has been crazy. I've never seen a date before 2029. And sometimes after crashes, it goes to 2030. So this is just a reference. That doesn't mean that you lock it in and like, yes, we get to retire on this date. It's just a live updating estimate. And I love that because I'm not a fan. I used to be in the business of creating budgets and projections for executives, and they always like to see huge growth assumptions. That's not how I roll. I like to say, where are we right now? What are we based on that? So I don't really think I'm going to have 17.1 million exactly in 25 years from now. But this will update real time as new numbers roll in. So feel free to play around out here if you have your copy. Time to get into the fun section. Dividends received. May is never overly exciting from a cash flow perspective, but holy cow did we run laps around last May. Check this out. And we're still out on that same spreadsheet from before. The Excel version has these data slicers and this pivot table for the dividend income. And you can see here in May of 2026, we had $3,871 of juicy dividends compared to a mere $1,550 last May. Let's investigate. Am I just making this stuff up? Well, we no longer have GPIQ, but in a way we do because it's now in our taxable account and it's GPIQ and QQQI. So technically you have to add these two together and you can see we have much more than we used to in GPIQ. And then VMFXX has become a combination of SGOV and a high yield savings account. So you have that 86 plus 138. We don't have as much cash as we used to, but we're still okay. And then the HODL Factory, I think we got rid of a company that paid in May. You can see we barely increased, and usually we increased by 2 or 3 times because the dividend growth rate has been 18% for the HODL Factory. But I think this is a little more fluky, but that's okay. We still won here at $16, and I think that covers it. It's a pretty light month, May is, because we did HSAs, yeah, cash flowers, and HODL. That's it. Just 5 sources, and really just 3 types of source for this one. And since we were short and sweet here, let's just take a look at where we're at. So you can see here in 2026 through May, we're at $27,350 of dividend income. Now, last year includes the whole year. That's where you can use these slicers. Let's just look from January through May, and you can see we're at $27,000 this year. And last year, we were at $13,000. The year before, we were at 10.3. So we've had a lot of growth. It seems wrong to have almost half the year and only $27,000, but June, September, and December are the huge ones. And we've only had one of the big ones so far in March because that's when the quarterlies pay. So really, this is more like a quarter of a year just over as opposed to half the year, which it looks like. We're going to sniff 60, 70, 80. I don't know exactly, but it's going up, baby. And I'm loving it. The portfolio has been stacking gains like crazy, but I remain focused on the same old boring things. Looking ahead. The strategy that I've developed for my portfolio is simple. Copy the methodology of the greatest investors on autopilot. I mean this sincerely. I have read over 200 investing books at this point. I know all the basics. Buy low, sell high, don't time the market, dollar cost average, never panic sell, all the things. And I built my system to replicate that wisdom while removing my emotions from the equation. I'm often asked by newer investors or people that want to get into investing, how do I start right now with the market running so hot? The valuations are so high. And the answer is simple. You get started just like you would in any market. Your target allocations will fix all of that. What portfolio would you build for your age and risk tolerance and goals? Let's say, for example, it's 50% QQQM and 50% SCHD. Then that is what you should do right now. So after you buy in, whether the market is hot or cold, it's irrelevant over long periods of time. Let's say growth crashes. Then you'll naturally buy more QQQM to get it back up to 50%, thus getting that comparative dip. Or if growth keeps running like crazy like it has, then you're buying more SCHD to get it up to its 50%. But the bottom line is you are always getting the biggest bang for your buck within your portfolio, within that world. And don't get tempted by the trends or headlines. It's all noise. Stay the course and win. And speaking of big winners, I want to give a huge shout out to you 39 now, all-time high by the way, incredible channel members, and particularly thank you to Crystal and Herbert for joining the crew. I really appreciate your extra level of support. I know I don't provide any groundbreaking perks like exclusive videos or anything like that, but that makes your support even more special. It allows me to help the masses as much as possible while being able to cover all the bills that come with YouTube. You really do keep these videos coming. I mean that genuinely. And my last shout out, as always, to Seeking Alpha. If you're watching this right when it launches, that summer sale is not here yet, so don't use my link. Wait. But I think as of June 10th, for almost a whole month, you'll save 25% off your Seeking Alpha membership by using my link, and you can always try it for free with the link. And if you like what you see, which I love, I've used Seeking Alpha well before my YouTube channel, you can hook your boy up and, more importantly, save 25% for you, because that is genuinely what I care about more. I want you to use this amazing product. And if you're an individual stock investor that wants to really track your performance in detail, check out Snowball Analytics. Try it for free as well in the link. They're pinned in the comment below, but I use that to track the HODL Factory. And check out one of these two videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.